With StockRover, you can set your own criteria. For example, you might look for companies with a P ratio under 15, a dividend yield over 3%, and a debt-to-equity ratio below 0.5. Imagine instantly seeking stocks that match exactly what you're after. No more endless scrolling on second guessing. What's awesome is that you get access to detailed company profiles right at your fingertips. You can dive into things like the company's management team and what gives them a competitive edge, all within the platform. Plus, StockRover pulls in research from reliable sources. So you're tapping into some serious authority without having to hunt it down yourself. It feels good knowing you're making decisions based on solid info, doesn't it? We all know that timing can be everything in the market, but quickly spotting stocks that fit your criteria, you can act fast and potentially jump on opportunities before others do. And because you're focusing only on what matters to you, you avoid that overwhelming flood of information that can lead to analysis paralysis. It's like cutting through the noise and getting straight to the point. Honestly, using StockRover has made investing so much more straightforward and less stressful for me. If you're looking to streamline your investment process and make quicker, more confident decisions, I definitely recommend giving it a shot. After all, who doesn't want to make the most of their time and money? To make agile and confident investment choices, imagine you've identified a promising tech stock that fits your investment criteria. Let's say it's a company pioneering in artificial intelligence with solid fundamentals and strong leadership team. Instead of getting caught in the endless cycle of analysis, you commit to making a decision within 48 hours. During this 48-hour window, you focus on gathering key information. Review essential data using tools like StockRover to confirm it meets your P ratio, dividend yield, and debt-to-equity ratio requirements. Read up-to-date analysis from trusted sources like Morningstar, Dividend.com, or Seeking Alpha to get expert opinions. Assess qualitative factors such as the company's management quality and competitive advantage. By setting this firm deadline, you create a sense of urgency that motivates you to act promptly without feeling overwhelmed. Let me give you an example of how this works in practice. Imagine you come across a promising stock. Let's say it's a renewable energy company that's gaining attention. Instead of falling into analysis paralysis, you give yourself 48 hours to decide whether to invest. This creates a sense of urgency without undue pressure, tapping into the mental trigger of urgency to motivate you. During this 48-hour window, you use a simple checklist to evaluate the stock. P ratio under 20. Does the company's price to earnings ratio indicate it's reasonably valued? Indicates that it's reasonably valued? Dividend yield above 2%. Will you receive immediate income through dividends? Debt to equity ratio below 0.5. Is the company financially stable with manageable debt levels? Positive earnings growth. Has the company shown consistent earnings growth over the past 5 years? Strong management team. Do the company's leaders have a proven track record? Competitive advantage. Does the company have a unique position or technology that sets it apart? If the stock meets all your criteria, it's a go. If not, it's a no-go. This binary approach simplifies decision-making by eliminating gray areas.